Hello and welcome to today's top story, a major shift in U.S. monetary policy. The Federal Reserve has lowered its key interest rate to a new range of 3.75 to 4%. But this cut comes with a caution. Policymakers warn that the economy still faces uncertainty. Job growth has slowed, inflation isn't yet fully under control, and future rate cuts remain undecided. In addition, the process of ending quantitative tightening is expected to conclude in December. Investors and economists are now watching closely to see where this move takes the economy, toward stability or toward greater risk. This is your finance update. Our next story: consumer spending continues to support the U.S. economy. A recent report shows that household spending still drives nearly two-thirds of all economic activity. Wages have risen by about 3.7%, outpacing inflation, which stands near 3.0%. Although consumer sentiment has dipped slightly, stronger incomes have kept spending steady. Investors are now watching closely to see whether this trend can last or if a slowdown in the job market could start to weaken household demand. This is your finance update. The next big story: a crucial meeting today between the United States and China focused on trade and supply chain relations. Top leaders from both nations discussed tariffs, high technology components, and rare earth minerals. Talks like these can quickly influence investor sentiment, market risk appetite, and global capital flows. Investors are watching closely to see whether this meeting leads to progress toward easier trade conditions or sparks new complications. We're keeping a close eye on the developments. This is your finance update. Today's major story: the ongoing government shutdown in the U.S. is beginning to affect the economy. Federal employees aren't receiving pay, key data releases are delayed, and policymakers are facing difficulties in making informed decisions. Analysts estimate that such a shutdown could reduce GDP by roughly 0.1% each week. This means the economy could stall or even take a downward turn. Meanwhile, both investors and markets remain cautious, as it's difficult to predict what lies ahead in this uncertain situation. This is your finance update. Inflation in the U.S. has remained around 3%. This suggests that price increases are under control and has given investors hope that the Federal Reserve may soon cut rates. However, weakness in the labor market and gaps in government data continue to worry policymakers. In this way, the economy stands on a delicate balance. On one side, prices are under control, and on the other, growth momentum remains weak. This is your finance update. Consumer confidence in the U.S. has fallen to a 6-month low. Surveys show growing concerns about job availability, especially among lower-income households. Meanwhile, higher-income groups remain relatively optimistic, creating a two-sided situation in the economy. This data suggests that consumer spending could slow down, making the Federal Reserve's decision on rate cuts even more complex. This is your finance update. Another important update: the International Monetary Fund, or IMF, has warned the U.S. that its budget deficits and public debt could get out of control. This year, the debt-to-GDP ratio is estimated at around 125% and could rise to nearly 143% over the next decade. Such financial imbalances could not only keep interest rates high, but also discourage private investment. Policymakers now face a tough choice: whether to stimulate growth or ensure financial stability. This is your finance update.